Hello everyone. Let's begin our session and the practice session for the topics chargeable gains. So I'm going to cover the entire chargeable gains practice session now. Have focus on my screen and let's do just multiple section A, section B and section C questions. So all eyes on my screen. Let's do the first one. Peter sells a chargeable asset on 10th June 2025 for 64,900 pounds. Okay, now before the selling cost of 400, he acquired the asset on 1st May 1999 for 10,000. This is the acquisition cost, and incurred an additional capital expenditure of 3,000 in June 2003. That's a capital improvement cost, and 2,000 in May 2011. That is also capital improvement cost, that is enhancement expenditure. The asset was not a residential property, though it will not really make a difference except for the POA, because now with the amendments, whether it's a residential property or it is not a residential property, the tax rates are same, 18 and 24%. Calculate the taxable gains arising in the tax year 25-26. Calculate the CTT payable for the tax year 25-26, assuming Peter's taxable income for 25-26 is, now there are four options, so we have to work out for all the four options. Okay, so now let me just insert one sheet here so that we can solve it very comfortably. Okay, so here we have four options and I will list down all the four. So I am doing question number 1 here. Okay, and here I will list down, this is option A, option B, option C and option D. Okay, what is the first thing? When we have to calculate taxable gain as well as the CGT payable. Okay, number 1 is, first let's calculate the chargeable gains normally, because what is changing is only the taxable income, so only tax will change, chargeable gain will remain same. Let's have the face value, let's have the sale proceeds. Now, what are the sale proceeds? And let me just get the calculator. Okay, what are the sale proceeds here? Sale proceeds are given as 64,900 before selling cost. So after selling cost, it will be 64,500, like 9 minus 4. So here I can use the term net sale proceeds and I can directly use 64,500. Wait. I will just take one option only to calculate the gains, and after that I will segregate it. Okay. Now we have got the net sale proceeds. Now less we will do original cost, then cost of improvement or enhancement expenses. We can call it enhancement expenses also, right? First enhancement expenditure is of the year 2003 and then 2011. Okay, what is the original COA? 10,000, it is given to you here, and 3,000 is the expenditure in 2003 and 2,000 in 2011. So let's reduce 10, 3 and 2. 10, 3 and 2. Okay, now we have reduced 10, 3 and 2. Now let's reduce and then let's calculate the chargeable gains. There are no losses. I will just reduce AEA, and you know, for a year, all the gains combined, the A available is 3,000. So we will reduce 3,000 here. I'm just preparing the performer here, okay? And now let's reduce and let's get the taxable gain. Now we will have different cases, case A, case B, case C, to calculate the tax. Okay, so here it is 64,500 less 10,000 less 5,000. I get here 49,500. Let reduce 3,000 and how much you get? 46,500. Till now it is clear absolutely. Now let's calculate the CGT. Now CGT under case A. Under case A, it says that the taxable income for Peter is 50,000 and does not make any gifted donations or personal pension contribution. Meaning to say that it is already used up the BRB, so there is no lower rate applicable. We will have to pay the taxes at the rate for 24% only, right? So we'll have to pay the taxes at the rate 24% only. So this is case 1 where I will pay taxes at the rate 24%. So CGT will be 46,500 multiplied by 24%, 11160. There is no need to pay the POA because it is not a residential property here. Let's take the second one. The second one says the BRB, the taxable income is only 20,000 and there is no gifted donations and not personal pension contribution, but it is only 20K. That means 17,700 is still the BRB available. Till that point, the rate will be 18% and post which it will be 24%. Okay, so let's do that. So I can say that because it's only 20K, right? And the BRB is 37,700. So the difference is 17,700. That will be at the rate 18%. And now since it is over, the total is how much? 46,500. So if I take in 17,700 at 18%, the remaining will be at 24%. So that will be 46,500 less 17,700. And that will be 28,800. So that will be how much? 17,700 multiplied by 18%, it is 3,186. And 28,800 multiplied by 24% is 6,912. Now you add it and you get your total tax liability. That is 10098. Okay, 10098. Done. Now let's do the C part. The C part says that yes, the taxable income is 30K, but he is making a gross personal pension contributions of 12,000. When he is making a gross personal pension contribution of 12,000, the gross word is given to you. So we know that there will be an extended rate band. So here I will write what is the extended BRB. Extended BRB is 37,700 plus 12,000. So that will be equal to 12 only, right? Yeah, 12. So that will be equal to 49,700. So till 49,700 the BRB is fully available. And if you see the question, the taxable income is only 30K. So if the taxable income is only 30K, that means the remaining of the band is available for BRB. So here if you see, the remaining BRB will be 49,700 less 30K, right? And that will be equal to 19,700. And that will be at the rate 18%, correct? The total is 46,500. So the remaining will be at 24%, and that will be 46,500 less 19,700. 26,800, right? And that will be 24%. So that will be 6,432. And here 19,700 multiplied by 18% will be 3,546. Now add it. 9,978. Got it? So we are done with this. We have got the next one also. Now let's do the last one. So let's do the last one. Now we have D. So the D one says, no wait, this one even you can do it in homework. Try it. Try it yourself, the last one. 140,000 is a taxable income. So you know that already, though HRB is also crossed. But then there is an extension of rate band because the contribution made is 30K. So both the rate bands, BRB and HRB, will be extended by 30K. Please do the extension and you do the carry on. Okay, do the extension and do it like this. Okay, so I hope I'm very clear. Right, done with the first one. Now let's do the second one. Okay, in the second one we have losses. So it's a good one. You will be able to understand the losses as well. Okay, Robert has capital losses brought forward, and in the performer that we've done in the class, I've already explained you where do you place the brought forward loss. So don't forget it. It is always placed at the end. So only at the end you will be placing the brought forward losses.